The ADP employment numbers were released today. In short, they weren't good. Private sector hiring rose by only 37,000. That's the lowest in more than 2 years. What's interesting is where the worst data is found and the market's reaction. We're going to show you what this all means and what to expect moving forward. Here's ADP payrolls gaining only again 37,000 jobs. That's a worse number again in a couple years now, even worse than last July's 42,000, and a far cry from the 221 gain last October. Here are the overall sectors within the ADP numbers. They're all kind of trending together, no big outliers. It shows us it's not a sector specific issue, but rather a broad based economic condition. From the best to the worst, ADP Leisure and Hospitality gaining 38,000 jobs, the best number in the past 3 months. Not bad at all. Here's ADP Financial Activities, also not too bad, gaining 20,000 jobs. ADP Information, up 8,000, following last month's loss of 10,000. Curious, it's moving pretty closely with our NVIDIA and AI stocks and seems to be recovering quite handily. Here's ADP Construction gaining only 6,000 jobs. This is the bad news. After March's 2,000 number and 18,000 in April, which was better than March, but certainly a decline, the trend certainly is not your friend. Here's ADP Manufacturing losing 3,000 jobs. Certainly last year was not a good year for manufacturing, and unfortunately, it looks like we may be going back to that direction. ADP Trade, Transportation, Utilities, many fear that this slowdown could be the result of the fear of tariffs and the implementation, losing 4,000 jobs. And the big loser this month, natural resources and mining. Now, we may think, well, gold and silver have been quite strong, but this is more closely linked to industrial production and the manufacturing capabilities, and certainly not moving in the right direction. And there is a link between this and manufacturing that we're going to show you in just a moment. ADP business size. This is the size of the different businesses, and the best numbers are in green. Those are the companies with 50 to 249 employees. In red, the larger companies with 250 to 499, and in blue, the smallest companies, 1 to 19. So we can't really say enough about or a lot about an economy that where the smallest businesses, the most sensitive part of the economy, are not doing well, and the largest businesses in red are not hiring either. Either case, that's not good news. Here are the takeaways. Well, ADP employment, those are sharp decline. No argument there. Services good, production bad. There's a common theme. You look at financial services, leisure, hospitality, they're doing well. That's a service industry. But the production side, not good. Mining and resources, manufacturing, that needs to improve greatly. Now, there was a muted market reaction. Stock market, not down that much, just a little, considering the news. Bond yields, down just a little. Fed funds futures, they hardly moved. So the market is sending us a message. Either the number was not as bad as we think. I don't think that's the case. Or rather, the market's not focused on the ADP numbers. The market's focused on the non-farm payroll. That's the big test. And the question is, will the non-farm payroll follow the ADP numbers? Now, if the market or the non-farm payroll number is very good or very bad, we could see a reaction. And the best way to judge this, 10-year bond yields and the Fed funds futures. If they react to the non-farm payroll number, that could indicate the Fed might be closer to cutting rates. So far, they're expected not to cut rates in the next few months. So we're going to watch the non-farm payroll on Friday and, of course, the market's reaction as a result. We hope this has been helpful. We look forward to seeing you back soon.